Fed cut their interest rates by 25 basis points to 4% and 4.25%. So the main reason is they had downside risks to employment. So we spoke about this the last two live streams. There was too much unemployment and the Fed had to cut interest rates to combat that. So as you can see right here, this is the first cut since December 2024. So this is the first rate cut. It was super anticipated. It was priced in. That's why we didn't see anything happening with the markets, but it's a step in the good direction, in my opinion. And the good news is that the Fed cut its interest rates into rising inflation. And the only time we saw this before is in the 1970s. And in the 1970s, so the Fed also cut their interest rates into rising inflation. And what we saw afterwards was the equity markets going insanely parabolic. So will this happen again? This is the question. Another bullish thing is, of course, that the Fed cut near all-time highs. So, and this happened as well in the future. In the past, this happened a little bit more. And as you can see right here, afterwards, a year after, it was always bullish. The next month, okay, the average is 0.1% up. But the months afterwards, it's very clear that it's always more bullish to cut interest rates when you are at an all-time high. So will these two things play out? I don't know. The thing we do know is that the Fed will probably cut 2 more times in 2025. So next meeting, most likely they will cut as well. The meeting afterwards, most likely they will cut as well. But then now the bad news, and I'll show it here. So they also said that they are reducing their holdings of treasuries. So what this means is this is just QT. This is quantitative tightening. And this runs now counter to the interest rates cut. So they cut their interest rates, but to counter it, they also are still doing QT. So they're just selling securities, and which basically means that they reduce the liquidity in the markets. And the guys who follow this channel, you guys know I always talk about liquidity. Liquidity in the markets is super important. Liquidity is what drives the markets, and the Fed is still reducing its balance sheet. So then, of course, let's go over to global liquidity, because of course, Bitcoin and every asset in the world is based on the global liquidity, not only the Fed liquidity, although it's the most important one. And also global liquidity is climbing. So global liquidity is still at an all-time high. It climbed to a new high of 184.9 trillion US dollars. And this is most likely due to the MOVE index. So the MOVE index, this is the bond market volatility, is at its lowest points. And this is super important because 80% of all the collateral is leveraged. So if there is low bond market volatility, this is super good for the collateral multiplier. And that's why we see more liquidity into the system. The second reason was the slowing pace of the Bank of Japan and the ECB. So that's still good. They're stopping their QT, which is good, of course, for global liquidity. But only these two things. The rest is not very good. So the Fed liquidity is not moving up. As you guys, as I just explained, they're still doing QT. So this is not good for global liquidity. And apparently, Michael Howell, global liquidity is losing long-term momentum. So he's also acknowledging that we are starting to get closer to a top in global liquidity, which of course is not good for Bitcoin. The thing is, this is more long-term. So if you look at the Bitcoin versus global liquidity charts with a 12-month lag, we still see that Bitcoin should, Bitcoin should still be moving upwards. But as you can see here, only $220,000, which is only a couple of percent up. So not super bullish. And that's why I said that the interest rate cut was bullish. That I had good and bad news. And this is basically the bad news, that they're still doing QT. Where is it? That they're still doing QT, and that liquidity is not really moving upwards. But we know, so we had a surge in gold. So normally, due to the recent price explosion in gold, Bitcoin should follow a little bit later. which will align with the global liquidity that Bitcoin should be up a little bit later.